Hello everyone and welcome to the MacroAce live trade prep for the EIA inventories with your host Tony. Can everyone hear me okay? Is my sound distorted? How's my sound so far? Is that better? Okay. All right, so we've got about 4 minutes until we officially start with the prep. There is a lot to cover though. We have had some earlier news between Russia and Ukraine, but we'll go through that late in a bit. Okay, so why don't we make a start now then? We've got about 3 minutes, or about 33 minutes until we get the EIA inventories release coming through. So, what is the release? It represents a weekly change in crude and gas and distillate inventories. So, what can affect the most is transportation stocks. It also affects consumer prices for a number of products. Bearing in mind the higher oil prices that we get, the higher prices that consumers pay for goods. On to our next bit. So why is it released to watch? The main reason being it can be a very volatile trade, particularly when the markets are in a normal condition, which we're not seeing at the moment now. Then we can see some quite large moves. We can see around $3 move, or sometimes when we get really good figures or really good deviation from the forecast figures. So how does it affect the markets? The key thing to remember is when more oil is added, or when there is a build in oil inventories, that is a negative for oil prices. So we'd see oil, WTI crude oil and Brent move towards the downside. And when there is less oil added, and when there is a draw in inventories, that's more positive for oil, as you'd see an appreciation in oil prices. Also, don't forget to remember the demand and supply. The more oil there's supplied to the market, when there is less demand, the cheaper the prices are. And when there is less oil provided to the market, but there is a higher demand, then that will increase the prices. So hopefully everyone can still hear me and see the screen from what I'm sharing with you so far. If you do hear any sort of distortions, if there is any issues, do let me know in the live chat, and I'll try and sort it out for you as best as I can. Okay, so triggers then. Key things to remember. So with the crude oil inventories, we're looking for a high, or highest estimate according to analysts. They're seeing about 2.1 million, with a low estimate of minus 3.8 million. Gasoline, highest estimated forecast at 1.4 million, with a low of minus 2.648 million, and distillate with a high of 0.5 million, with a low of minus 2.437 million. Bearing in mind we did have API data come out last night as well, which can add to sentiment before we get the official data from the government in regards to if there was a draw or a build for inventories. So what we had seen with API came in at a draw at minus 3 million. The forecast was minus 1.558 million, with a prior of minus 4.28 million. So quite a large draw there compared to the forecast figure that we'd seen for API last night. And then if we look at the other bits of API data as well, so distillate stock change doesn't have a forecast, but from compared to the prior, it did see a slight build there to as minus 0.215 million compared to the prior of minus 0.826 million. And then gasoline stocks, we'd seen a draw from the prior at minus 1.357 million, prior being minus 0.626 million. So those are the triggers that we have. If we look at what we have for the forecast figures as well, and for today, so the forecast for crude oil inventories at minus 2 million with a prior of minus 2.508 million. And then for gasoline, looking for a build as well, with a forecast of minus 1.6 million with a prior of minus 2.947 million, and then distillate with a forecast of minus 1.5 million with a prior of minus 2.071 million. So overall, from the EIA inventories, looking for a build from what we can see here so far. So we'll keep an eye on those figures and see what the deviation is, which we'll talk about later, and how we had seen what the prior deviations were and how that affected WTI crude oil prices. Okay, so going back to the presentation. Now, the market reaction, what we had seen prior. So March 23rd, or last week, we had seen a draw overall. So we had seen a draw overall. There was some strengthening on WTI crude oil, but there wasn't a strong initial reaction. We'd seen about 40 ticks towards the upside off of the figures that had come through there. If we have a look as well at the prior reaction, so we can see it here as well. So this was, if I bring on the chart, so this was the prior release, or week released last week, of what we had seen. So again, there about a 40 tick move towards the upside on what we had seen on the mini crude oil futures for WTI. Okay, leading on to our next point is sentiment. So there's a lot to cover with sentiment at the moment. We have not only issues with Russia and Ukraine that are still ongoing, but are seeing some improvement or steady improvement. But we also have China with their COVID cases seeing a rise or rise again. And we also have OPEC that has made comments in relation to Russia as well. So there are three key things that are affecting market sentiment at the moment. But one thing to bear in mind, so yesterday, when we had seen WTI crude oil drop below $100 a barrel, or about 7.1%, as Russia signaled de-escalation. So according to ABN AMRO, they say that hopes are rising that the talks between Russia and Ukraine will eventually get some results, as according to their senior energy economist. Or, in other words, that Russian oil supply won't be hit any harder than the self-sanctioning that we have seen so far. Then you have, there's a nice chart here from Bloomberg that they've got here from the source from NYMEX, that we can see that huge plunge off of the more positive news that we had received in regards to Russia and Ukraine, potentially having an agreement or having more positive negotiations. That's the reaction that we had seen yesterday. Of course, that has reversed today and over last night as well, where we're seeing where crude oil, or WTI crude oil, is back up at around $108 a barrel after that initial move towards the downside yesterday, or that plunge. Then we have Saudi Arabia and the United Arab Emirates. So they were called on by Western countries to expel Russia from OPEC or OPEC plus. So they had rebuffed those calls. They had mentioned that the group, or OPEC plus group, has had a long history of working together through armed conflicts. So even with this current situation of Ukraine and Russia having an impact on oil prices, where we're seeing a lot of whipsawing, what we had in the last month or so, about $35 moves on WTI crude oil, that hasn't led to any change in views in what OPEC is doing and what they're looking to do. So they're still sticking to their guns of increasing oil production by 400,000 barrels per day. That's something that's been ongoing and the Russia-Ukraine conflict hasn't affected that yet, or doesn't look to be affecting that. But that's and we do have reminder OPEC with their meeting tomorrow to confirm that they're going to be increasing their oil production by 400,000 barrels per day. There were some comments that were coming through on Twitter. Was some people citing that OPEC could increase their oil production by 440,000 barrels per day, but from the main wires, news wires, no one else has indicated whether or not OPEC will increase oil production by that amount. Now, if OPEC does decide tomorrow to increase oil production by slightly more, 440,000 barrels per day, remember the key things: the more oil that is pumped in to the markets, the more of a likelihood that oil prices will start to go down. So if we do get the surprise, be aware of that expectation and just remember the supply and demand and how that works within the oil market. Other things to remember as well, so going to China. Now, oil prices were also softer yesterday as China grappled with its biggest COVID outbreak since the pandemic began. You had China actually last night reporting over 8,600 cases, which is the highest in China since the outbreak in Wuhan a couple of years ago, mainly driven by Shanghai, which has around 6,000 cases. But one thing to remember with why the oil market took that in a negative way is that Shanghai had decided to block off or quarantine certain parts of the city for 4 days to curtail the escalation in COVID cases. So we had seen a negative reaction to that in crude oil, of course, having an added effect to the sentiment overall with Russia and Ukraine. So that's one thing to bear in mind. And then if we're looking at today as well, you've had analysts being surveyed by the Wall Street Journal. Forecasting that today's EIA inventories data will also show across the board bullish declines. So a reminder as well that WTI crude fell sharply in the past two sessions on hopes for a ceasefire deal between Russia and Ukraine, but analysts from the Wall Street Journal citing that those hopes may be too optimistic and the shift in sentiment is also propping up prices. So if we're looking at WTI crude oil today, if I bring it up here for you, what we see so far, actually if I put in a higher time frame so we get a clearer image. So that's the news yesterday, that Ukraine and Russia could have a discussion about Crimea and how that looks geographically over the next 15 years. And over that positive development, we had seen, if we look overall, about 8% decline on WTI crude oil off the back of that news. And then the only thing that did knock that, the reason why we had seen that reversal here with the news that we had received, is that from Russia's side, they didn't believe, or they were still continuing with their campaign. And they don't believe that Ukraine is going to meet their demands. So those demands being, there's 6 key demands that Russia has that they are looking for from Ukraine. First one, which has been the main sticking point, that they don't join NATO and keep a neutral position. Second, that Russia should be the second official language in Ukraine, with laws prohibiting it being abolished. Thirdly, recognizing Crimea as a Russian territory. Fourth, and area where the conflict has happened a majority of the time, that they recognize the independence of Donetsk and Lugansk. Number 5, the demilitarization of Ukraine and the abandonment of weapons that could be a threat to Russia. And then banning of ultra-nationalist parties and organizations in Ukraine. So those are the 6 key demands that Russia have put to Ukraine. Now, one of the headlines that we had received earlier today, or not too long ago, which changes the sentiment or changes the way the markets might react today somewhat. So the news that we had today was that, according to Russian negotiator Medinsky, that Ukraine has declared its willingness to meet core Russian demands. Now, we haven't had any confirmation from Ukraine side of whether they have agreed to meet Russia's core demands, or how many of those demands will Ukraine be willing to meet. But that's one of the headlines that came out not too long ago that caused a risk-on reaction for the markets. So if we're bearing in mind, we've also got to take in notes how the rest of the market is reacting. So off the back of that news, we had seen the S&P 500 see a move towards the upside, the DXY see a move towards the downside, and WTI crude oil had seen some movements towards the downside off the back of that news. But overall, so around there was when we had the news come out that Ukraine, according to Medinsky, has declared its willingness to meet core Russian demands. So we've also got to bear in mind not just looking at the oil markets before we get the EIA inventories data, but seeing how the rest of the market's reacting overall. So with this risk-on sentiment that we're currently seeing, or seeing so far, or that risk-on reaction that we had seen earlier on from that headline, what does that mean for the EIA inventories release itself? Now, in the past, if you've watched the live stream a couple of weeks ago, we had some positive news that there are more positive developments between Russia and Ukraine, and off the back of that, we had seen WTI crude oil move towards the downside. When the release came out, we hardly saw any reaction from WTI crude oil itself. If we're looking at the deviations and how much crude oil moved, I'll bring that out here for you guys. So March 16th is when we did have that more positive news, even though there was a deviation of about 6 million compared to the forecast figure from the actual figure. We did see an initial 42 tick movement towards the downside, but that was a very, very quick reaction. If I bring up the video here for you as well, so we can see how it reacted, and that will give you a clearer idea as to how EIA inventories became a non-event. So here we go. So if I just kind of go back a little bit. Okay, if I play the video for you here, hopefully you guys can see it all right. Okay, so that's about 10 seconds before the release. There we Okay. Go. So the figures had come out the initial reaction, again, we did see that slight movement towards the downside there, but then that movement didn't really last that long. Off of the back of, as we can see that on the video, that there was an FT piece that had said that Ukraine and Russia have made significant progress on a tentative 15-point peace plan, including a ceasefire and Russian withdrawal if Kiev declares neutrality and accepts limits on its armed forces. So that was the reaction there from WTI crude oil, and that didn't last long. As we get to the next candle, and then it kind of just continued the rest of the move that had occurred after that bit of news had come out from the Financial Times. So around here, so we had that news, had seen that negative move towards the downside. So moving away from the video and going back to what we're expecting today. So from last week's data, what we had seen, and as I'd shown you on the replay. So here we had seen about a 40 tick move towards the upside there. And then that initial reaction didn't really last that long. And then we'd started to see a reversal of that trend, or of that initial move towards the upside. So that was when there wasn't any news happening, or there wasn't any major news that had occurred between between Russia and Ukraine. So we did see some normalcy where we had seen a slight deviation from the forecast. If we bring that up here, when we had seen about 1.758 million deviation from the forecast, and overall with the EIA inventories showing a draw, we did see some positive moves there. But I think overall, from what we've seen in the past of what the previous market reactions, so March 2nd, about a 5 million deviation, we had seen a positive, more of a positive reaction or stronger reaction from WTI crude oil. But bearing in mind these other releases here, or the other bits that we'd seen here, had been driven a lot by the sentiment, where sometimes you wouldn't get too much of a deviation from the main headline figure of crude oil inventories, but you'd get a strong initial reaction occurring. But overall, we're looking for at least about 5 million of a deviation from our side, from what we've seen in the past, for a stronger sustained reaction, rather than the initial move towards the upside or the downside, and then for it to reverse and then go back the other way. Okay, so if we go back to our slideshow, hopefully, if you are still listening in, if there's any questions that you guys have, do let me know. And if you are watching this back, do email me at tony@financialjuice.com. I'll put it in the chat as well for you at the end of the stream. But if there are any questions that you have about the knowledge, or anything you want me to cover off, then do hit me with an email, and I will jump on and answer it as best as I can. Okay, so if we go back to our next bit, if we go to our slide, of course we'd seen oil prices claw back Tuesday's losses. And Monday's declines came again over signs of progress between Russia and Ukraine negotiators, which drove investors out of the commodity. We'd seen depreciation on WTI crude oil. So again, you had mixed sentiment from Russia, that the Deputy Defense Minister Fomin reportedly said that the country would decrease military activity in the direction of Kiev and Chernihiv. But the Kremlin spokesman Peskov, who's been has been at the forefront when looking for comments on what the Kremlin is thinking of, said that Russia hadn't noticed anything really promising from those Ukrainian proposals on Tuesday. So a lot of mixed reactions that we have seen overall from the markets just from these headlines, which has dominated the sentiment overall. Then if we look at investment bank views, so Commerce Bank, they say that the slide in crude this week, which has at times surpassed 10%, has made it even less likely that the OPEC Plus will decide at its meeting tomorrow to step up production to a greater extent. Now, they're expecting, as well as other analysts too, that production will still increase by 400,000 barrels per day in its meeting tomorrow. ANZ coming out with their previews and their thoughts as well in regards to China and the COVID shock that they're experiencing at the moment in Shanghai. Mainly that COVID-19 outbreaks in China are raising fears for demand, and the markets are fearing that the outbreak could ultimately put under threat the 15.5 million barrel per day demand of oil that the country consumes. So three big things part of sentiment. So OPEC, Russia, Ukraine, and China. So far, where do we see WTI crude oil up about 2.85% on the day? So what should we see if we don't see any other bits of news coming out before the release, which if we have a little look, if we go back to our window now, if we don't see that any other bits of positive news or negative news coming through, I think today we may actually get some form of reaction, but that's yet to be told. Yet to be seen. Okay, so 3 seconds to go. That's coming in as a draw there. A draw of minus 3.449 million. Overall, the gasoline and distillates seeing a build actually. So distillates seeing a build of 1.394 million and gasoline seeing a build of 0.785 million. So did see did see some initial movement towards the upside, but overall we're seeing it's very choppy here. Then we'd seen a movement towards the downside. We'll see how the market reacts to this. But overall, so a headline figure seeing a draw, and then the other two figures seeing a build. So a bit of a mixed reaction here on WTI crude oil from what we can see. Let's keep our eyes on. Okay, so that is a release there. So we did get a reaction. Even after that positive bit of news from Russia's negotiator Medinsky making comments that Ukraine has declared its willingness to meet core Russian demands. So overall that candle finished positive. If we look at the ticks that we'd seen. Okay, so about 22 ticks towards the upside there, but I think we can't ignore the fact that from there being a build, we have the two figures. So we did see that initial move towards the downside. So if we go, let's measure that too. Okay, so about 59 ticks was the downside on WTI crude there on the mini futures contract. Oh, excuse me, the micro futures contract there on WTI. So about 59 ticks was the downside there. Okay. So it looks to be continuing to push down off of that build overall from the EIA inventories. So different. So the crude oil inventories, if we're looking at the API data, near enough came in as a draw. The distillate, from what we've seen, came in at a build. And then the gasoline had an opposite reaction, where we'd actually seen a build rather than the draw that the API figure has suggested last night. So now seeing continued movement towards the downside here.